Another interesting assortment of top stock picks this week. Eric, we start with you. You're actually talking about a stock this week.
That's right. I'm taking a gamble this week on Las Vegas Sands. This is a number 2 ranked stock, and it's seen some solid earnings revisions over the past week. Actually, for the past 60 days, we've seen a ton of estimates move higher. I think it's 7 estimates move higher for the year period, and none move lower. The stock also has a positive earnings ESP, and with earnings coming up, it could be a stock that could beat earnings and continue to rise here. It's also worth noting that the company is pretty diversified from a geographic perspective. It's got obviously in Las Vegas, as you might guess from the name, and then they're also actually very big in Macau. That's actually their largest market. They have the largest casino in the world actually over there. And then they also have a property in Singapore, and there's actually only one other casino in Singapore, so they got kind of a duopoly going over there. Mm-hmm. So this could be a very nice pick both in the short term and the longer term. And as a ETF guy, I feel somewhat obligated to mention there's also a gaming ETF out there, BJK, from Market Vectors.
Yeah, I mean, I was going to feel out of it if you didn't have ETFs in there somehow. So are you partial to the sector or just this stock?
I do like this stock. I actually do own it for my own personal portfolio.
Okay. Nick, you are looking at the banks. Bank, anyway.
I picked Deutsche Bank, which is a little bit, left me a little bit shocked. But when I was looking at the details of it, it really has a nice story that's setting up from a technical and fundamental perspective. It's cheap. It's very cheap. I mean, I think the PEG ratio is 0.6, so nobody's paying up for growth. They don't see any growth. You know, it's trading a little bit over 7 times forward earnings, which is relatively low, and it's actually trading below tangible book value, about 0.9. And on all 3 of those measures of valuation, it is well below the 10-year median. So it's kind of trading cheap to itself and kind of trading cheap outright. And if you lay over that, the fact that earnings estimates have really gone up significantly in the last 30 days, which I was quite surprised to find, up about 20 cents for this year and about 30 cents for next year, it stands in a lot of contrast to what we've seen from some of the big U.S. banks, where going into the earnings, the estimates were actually kind of flat to lower. If you look at it technically, there's a very nice kind of base on the charts, and I think if you could get it up over the kind of 49.5 to 50.5 area, it looked like you have a breakout going on. So all those factors kind of compelled me to bring this one up as a potential good idea.
All right, Tracy, Red Robin.
Yeah, this is the burger restaurant chain, and they're kind of lumped in with the casual diners like Applebee's and Ruby Tuesday. Now, this is a Zacks number 1. Estimates are rising, and you're expected to see pretty good growth this year, about 10%, and another maybe 16, 17% next year. Mm-hmm. But I do caution that the restaurant industry right now is kind of in flux, and the traffic isn't that great at most of them. Ruby Tuesday just reported it wasn't that great for them. They're in the same area, so you do have to have a little bit of caution when you're getting into this area. But that being said, Ruby Tuesday is kind of going through this big transformation. They're redoing their menu. They kind of tested it over the summer and decided it worked so well that they're rolling it out to all their restaurants. Mm-hmm. A lot of the analysts think that'll be a driver going forward because people want to try the new things. They're also doing little things you wouldn't think about. They used to serve their burgers in a basket with the tissue in there, like a lot of burger joints do.
You mean Red Robin?
Yeah, and now they're putting it on ceramic plates. Just little things like that, and then they're remodeling a whole bunch of their older restaurants. That's going to be a multi-year process, but they're also seeing good returns with that. So you're kind of in a turnaround story. The stock isn't real cheap here. It trades at 31 times. For me, a value person, that's pretty expensive, but you are buying the growth. They have 480 stores now in the U.S. and Canada. The burgers are hot, burgers are in. But if we get a bigger pullback, it might be a little bit better of a buying opportunity here. And watch their earnings report in early November, because we're going to see more about what's really going on in the economy and with the consumer. But for a longer term play, the burgers is where it's at. I like this.
Okay, burgers is where it's at.
Yeah.
Remember that. Thank you all for that. And don't forget, there are more stock picks for your consideration. You can find them on our website, Zacks.com. If you're not there already, get on over. They change often. With everyone here, I'm Terry Ruffalo.